Hi everyone, and welcome to the latest episode of the HeelanHub podcast, the show for small business owners. I'm Dan Heelan. On today's show, it's me just talking to you about how to form a limited company. Now, I thought it was a cool idea to come on at the mic and refresh everybody on what you need to do here, how you do it, and some of the key decisions. This isn't like a how-to, I'm going to say click here, click there. It's really the key things you need to know to be able to go and do it. Where do you do it? What things you need to worry about? And also, I want to add a bit of context around what happens at the end. Okay, you've got this company. What's the next steps? What do I need to think about? So I thought it was a great idea to come and talk about this for sort of 24, 25, refresh the content, and just so that you're aware of where we are right now, especially if you're looking to get that new limited company done into the new year for, new year, new business type idea. It's obviously a time where everybody thinks about doing something new, and I wanted to, particularly around limited companies, make sure that you've got some context around whether this is right for you. So let's get straight into it. Now, being a podcast format, it allows me to expand slightly more on it. If you wanted this in a more concise or visual thing, you can pop to our main YouTube channel at Heelan Associates, and you can see me probably do a much better job of what I'm going to do here than ramble and talk off mic. As I think I mentioned on a previous episode, we're also throwing these up on YouTube. So if you do want to kind of just see me talking at the screen and expanding on this and listen to it via there, that's also another thing you can do. So there we go. So let's get straight into it then. So the main thing I wanted to recap on before we get going is what actually is a limited company, because I think with a limited company, people know it sort of as a thing, but what is it? Well, the way to think about it, I think, is as another person. Think of it as, there's you, and then there's this company. You're going to call it a particular name. It now exists. It can do its own stuff. It can go sign contracts with people. It can get contracts in its own name. It's the thing giving the services to your customers or clients, or selling the product to your customers, right? It's its own thing. And the cool thing about that is it comes with something known as limited liability. And what that means is that if it got into trouble, so for example, let's say somebody sued you, insurance didn't pay out, the only things up for grabs in that scenario are things the company owns. It's not your house or your car or anything like this. In general, there are circumstances where this isn't the case. So for example, if you've defaulted on a bank loan, you might have been asked to sign what's known as a PG, a personal guarantee, and they can kind of look through that limited company then and go back to you. But that you would know that. But in a general sense, they give you this limited liability protection. And as a result, a lot of people really like the idea of that. I think also it can add some sort of gravitas to the situation. Naturally, we've done a previous episode on should you be a limited company, talking about this. And I think that's a good place to start. So, recapping on the basics of the limited company is its own thing. It's publicly registered. You can go on Companies House. If you type in Companies House Beta, B-E-T-A, you can go and you can just stick any company name in there, and you can see a bit about them, who owns it, who the directors are. You can even see their accounts, albeit most people will file things that there's not much you can read into there, but it'll give you some context. You can go and do that. So that's all online. So that comes with it. Now, when we're talking about forming and how to form, I always think that I want to say to you, should you first? Think about, should you form it? The main reason I say that is because every year we see people who formed a limited company just because they thought that was the thing you needed to do. And then they realise they've got a load of filing to do. And that filing is normally something that you need help with an accountant for. There's a cost involved with that. And maybe they only turned over £400, £500. It can be really expensive. And if you want to hear me, or at least it will feel expensive if you've only turned over £400-500. So, but if you want to hear me talk about that in more detail, just check out, I think it was episode 155. We talk about that. Should you be a limited? And I'll talk about that in more depth. But just check, please, just check if you can. Make sure that limited is for you before going down this route, because it's not for everybody. And actually, as I allude to in that video, 9 times out of 10, you could just start as a sole trader, a self-employed person in your own name, and it would be far easier and more flexible. So just do that. But there are tons of particular situations where a limited company from day one can save you some decent tax and makes a lot of sense. And the limited liability we're just talking about could be really good as well. So go check that out. So then when we come to, well, what decisions we've got to make then to get this thing going? I think the first one is deciding what you're going to call the thing. What is the limited company going to be called? Now, there are some restrictions to this. So for example, you can't call it royal or king and queen. Sometimes you need to ask permission. So for example, we form limited companies for somebody with the surname that sounds like one of those things. You can have somebody who has actually got a surname called Queen or King, for example, and you have to do a bit of an extra few hoops to jump through to get that formed. So it's not like you can't do it. It's just that by default, you're going to be sort of restricted against doing it. The same as offensive names and things like that. You just can't do them. So there are some things that are restricted. So just bear that in mind. What I would probably do though, when it comes to thinking about naming it, the first thing to do is go to that company's house beta that I was talking about. There's probably another name for it, but that's just the way it displays, and Google finds it pretty straightforward. So go and have a look at that, stick it in there, see if anything comes up. If it doesn't, that's great. That means it's in theory probably likely to be available, but also have a look for things with similar names, because some people will do things like they'll call it whatever they're calling it and then put in brackets UK, or you might find the one you want's there, but it says systems rather than services, and you're going to call your something services, and there's a something systems. So what you might find is that they own a trademark or something like that they can then write and force you to change your name. I have seen that, where somebody will be like something. I remember with the motor company quite well, something motors. They could form a limited company. The name was available. It was physically possible, but somebody owned that trademark, but they just didn't have the limited company name. And they wrote to them and said, look, we're going to take you to court unless you change it. So just do your homework, go on Google, have a look at Companies House, but also just have a look around, have a look online and see what pops up. Google's obviously a great tool these days for grabbing all sorts from the internet, so go and do that. You might check out the trademarks, see if there's any trademarks associated with any of these names, and go for there. Because just because you can get a company that allows you to be called that doesn't mean that somebody else doesn't own the trading trademark of that particular name. So just check those things out and do a bit of homework and then go from there. Now, it might be worth saying that you don't actually need the name to match what you're going to trade as. So you might be called some funky brand name shop, but your limited company might be really boring and called AL Holdings, and there probably is somebody called AL Holdings, so apologies, your name is boring, but that's completely fine. There's plenty of boring limited company names, right? So, but you can have two things called two things different. I think for most people, they'd want them to be similar, just because you can have then this idea that if somebody goes on, like when you get a bank account and somebody wants to pay you, it'll normally do a check. You've probably seen it yourself. It'll do a check to find out if this is the right business for you and things. And whilst you can have trading names with a bank, sometimes it's just easier all round to call something, at least something similar that someone would recognise. Particularly if you've got to put it, as you often will do, on letterheads and things like that in small print, is making sure that, you've got something at least similar to your trading name would be good. But you don't have to. So that's worth saying. And you can, if you get it wrong and there is a trademark one, you can be asked to change, or Companies House could ask you to change it. So just spend a bit of time to get that right. It's going to be quite important, and then go from there. Now, it's also worth saying you can have the word LTD or the actual physical long word limited. They are different. That if your legal name is LTD on the end, it's LTD on the end, or if it's limited, it's limited. But there's no disadvantage or advantage. I think a lot of time it's just what looks cooler. You find with shorter names, people tend to use the whole word limited, and with longer names, they tend to use the shorter, but it's entirely up to you. So having thought of that, your next decision then is, well, what's my registered office going to be? Now, your registered office, apart from where normally your kind of registers and your company books and things are held, is not always the case. There is a legal definition and things that you're meant to keep there, or you're meant to advise them of an alternative inspection address and things like this. But if you just think about it as, I think the easier way for most owners is to think about it as, it's the place where publicly you can see where the address is registered. So if you go to that Companies House beta thing we were talking about and you stick the company in, you're going to see address, and that's their registered office address. So if you're, say you're a freelancer, you're just starting up a limited company, you might not want that to be your home address. You don't publicly people knowing where you live. And the good news there is there's nothing stopping you buying an address, using an address. There's plenty of companies that sell them. A lot of accountants do it by standard. They'll offer you an address that you can use. Now, it has to be a physical address, and that's normally the case with these things that you buy. So you can't just do a PO box, for example. You need a physical address, but you can buy one. So go and have a look at that. But what I would say is also think about then there's two different things. There's your registered office. There's also your trading address. Now, your trading address is important for the revenue. So, for example, if you registered for VAT, and that's a whole other topic, whether that's right for you. If you did register for VAT, then you have to provide your sort of principal place of business, and that goes on your VAT certificate and everything else. And that is secret, and that's between you and the revenue. But you will have to provide that on occasion of where you're actually trading from. Now, where it could be public, and it's relatively important these days, is on something like Google My Business. So if you're going to get set up online and you're going to drop a pin on a map of where you're operating from, you don't necessarily want that to be your registered office. Say you've got it with an accountant or another one, I don't know, Regis or somebody that sells these things. You know, you and 200 businesses that are registered there. It's going to look a bit odd on a map. So you might want to think about using another address where you could actually trade from, or maybe register with Google My Business so that people can see where that is. I mean, obviously, if it is your house, you're probably not going to want it on there, but it's just worth thinking about, do I want a different public trading address? And also like a postal address. I know as providers of registered offices as ourselves, normally you don't want all of your random postal parcels being delivered to your registered office, and doesn't matter how many times you put in that your trading address or the postage address is X, the amount of times someone will get that wrong and ship your thing to your registered office, believe me, is true. I've even had our offices, we've even had people turn up for interviews here, for example, because they stuck a bit of information about the company and it hit a registered office and there was no clear trading address online, and people turn up and they're like, "Oh, here for my interview." We're like, okay, we don't have any interviews, and then you find out it's for a client. So just think about those kind of things. So deciding where your registered office is going to be is quite big. Now, there's also some important, and this is really, really important, something I didn't expand on when I re-recorded this video recently on YouTube, is that you often have to request a Companies House authentication code, and that allows you to make changes to your record on Companies House, allows you to file a confirmation statement and persons with significant control register that you're going to have to do every year, and that code initially gets sent to that registered office. If you're renting some really weird place, you don't know where it is, and there's a delay getting those things, it can really be quite annoying, particularly if you leave these things to the last minute. So just make sure wherever your registered office is, you're going to get regular access to the post, and it's not going to be a problem getting hold of it. So bear that in mind. That decided, you're then going to think, well, who's going to own this business? Now, quite often, of course, it's going to be you as the owner. So it's the shareholders. So the way the companies work is normally you will have something where it's a company. You've got a couple of options. You've got something known as limited by guarantee or limited by shares. You always, as a small business owner, nearly always, of course, check if it's right for you, but generally you're going to want to be limited by shares. And the reason for that is that you want to be able to pay dividends out and things that are quite tax efficient. When you're limited by guarantee, those things aren't on the table. So limited by shares, you're the shareholder, but you've got lots of choices about how many shares you do. What is their nominal value as it's known? Do you want to call them different things? Do you want to have different share classes? So these things is where accountants and lawyers and people like that can help you make a decision about what the best thing to do is. But if you were going to form it yourself and you're absolutely sure you want to do that, keeping it simple is often a good idea, as is, I mean, it's very normal to have, say, 100 £1 shares. Again, I'm not saying that's right in every situation, but that's the most common thing you'll see is 100 £1 shares, ordinary shares as they're known. And when you form it, we'll talk about that in a bit, you will get articles of association and things with that have that structure. The reason I quite like it keeping simple as well is we'll talk about it as we go further on, but practically when you go to form a bank account, they have to kind of look at who owns it, and they've got anti-money laundering procedures and all this due diligence they need to do on the owners of the business. Obviously, the more people you have as shareholders and directors, the more people that there are checks to do, and it can be a bit of a practical nightmare when it comes to opening a bank account. So you can kind of keep it simple. The only thing I would say on shareholding is I think it's a really good idea if you're all really, really determined to bring somebody on. Say you've got a significant other you want to share tax. So have some sort of ownership in it and potentially share tax allowances. Having them on while it's got no value when it's starting is often a good idea, because if you start trading the company, it starts to have some cash in the bank, it starts to own things. There's actually tax consequences you've got to consider to bringing somebody else in and giving them shares. So it might be structurally you want to have them on from day one. So that's quite often where you'd want to get some advice just to make sure that's right. But otherwise you would keep it as simple as you can to get yourself going. But you can change it later. You absolutely can change it later. It's just if it's worth anything, or you at least got to consider whether it's worth anything, then there can be tax consequences to doing it later. So you can decide who's going to own it. Then, and also, sorry, just to go back on owning it, again, just giving a bit of context, we see a lot of businesses where people jointly go into it. So they're sort of forming a business together, maybe 50-50 with their mate or something like that. The success rate of those is not high, in all honesty. It really isn't. It doesn't mean it can't be done. We've got some great successful kind of business partnerships, but just know that it's not always very successful. So really consider if you are going to give shares to somebody, because it's structurally and practically a bit of a pain to get them out later. So make sure that you really do want to give shares to somebody if you're going to do it. So they go decide who's going to own it. And then you're going to decide who's going to run it. And by run it, I really mean who's going to be responsible, who's going to be the named director or directors on Companies House, because with that comes a load of responsibilities. Now, you don't have to be, although it's typically very common in the small business world, you don't have to be a shareholder and the director. So using a stereotypical example, husband and wife, one of them, say the wife is the primary person, let's say you're running a marketing business, the wife's the primary person, but the husband maybe has a part-time job, has some tax brackets and there might be some use there, has some input in the business, will sometimes be like a small minority shareholder, but won't actually be a director. It'd only be the wife that'd be the director because she's kind of the person behind the business. She's the one who wants the responsibility. She wants to be named on Companies House with some of her personal details available publicly. You know, there's some risk there. So just decide who wants to be the director, but know that you don't have to be a shareholder to be a director. You could also have a director that's got no ownership at all in a company. That's very possible, very common. So think about all those things, but it's your responsibility then, if you are a named director, to do certain things, act in the best interest of the company, file the accounts, those kind of things, and you need to be 16 or over. So who will run it? Then once you've made those key decisions about where your office is, what it's going to be called, who owns it, who's the directors, you're then going to move to forming the company. Now, this is the bit where the how-to-y type stuff is interesting because really you don't need it. If you've got two kind of paths. Path one, you go direct to Companies House and you form it. You fill in an online form. It doesn't take that long. It's not that onerous. If you made the decisions we're talking about, you can do it. Costs about £50 right now. They've just changed it. It used to be really cheap. I think it was about £10, £13. Now it's changed. It takes about 24 hours before it becomes live. So you can do that yourself. And I'll tell you about the pros and cons of that in a minute. Or you can use a third-party agent. When I say third-party agent, I'm talking accountants, I'm talking lawyers, I'm talking there's online firms that just do company formations. And at the time of recording the video in late 2024 and the podcast in late 2024, you can do this with an agent with no problem, and it's fairly straightforward. It will be changing slightly. Companies House are currently going through a sort of tech transformation, I suppose, and it will change, and there might be some more steps in place. It'll still be possible, but there'll be some digital security checks that's going to be needed. I think they're looking much more about trying to lock down who can open companies and what do they know about them, because at the moment and historically it's so easy to call yourself like Mickey Mouse and form a company and it'll be live and no one will ask you any questions. Like, it's silly. So they're going to be locking that down. But if you're listen to this podcast later on down the line and you think, oh, this isn't very easy, you haven't mentioned this new security check because it doesn't exist at the time I'm recording, but I am aware that it's coming. Now, regardless of whether you get an agent to form it or you do it yourself, what will happen is you'll get a incorporation certificate when it goes live that says the company exists, and that's one of the most important documents you'll ever see. Now, it sits on Companies House. You can always get another copy, but just keep it. You're going to need it for when you open the bank or prove to anybody that this company exists. It will have a company registration number on it. Normally, when you form it, you'll also get articles of association. They're very, what they call model articles a lot of the time. They're the standard ones. Now, if going back to deciding who will own it, you decided to set up something where you wanted to call your shares different things or have different share classes, which is very common and often a good tax planning strategy in a place where you might want to not pay equal dividends out, you're going to need particular articles. So make sure that works for you and that those articles match, and that's where you might need some additional help if you're thinking of doing that kind of stuff. But if it's just you've done 100 ordinary shares and you're just starting out on your own solo, you will normally have model articles that would be kind of boilerplate and will go online. The one thing that is different between an agent and Companies House at the time recording, though, is that Companies House won't give you the company registers. Now, the registers you're required to hold by law, and they keep information about who owns the company, register of, addresses, and there's like a share certificate. There's like a little pack, I suppose. Like for us, it's a digital pack that we would create, and it's got Word documents on. Normally, the agents will supply those. Not all of them, but it's worth checking. But Companies House won't. And you might think, well, I don't really need them. But if you ever want business finance, some lenders will want to see them to make sure that they can prove it's the only way to prove the ownership. And that sounds odd because you can see some ownership information online, but that ownership information is generally only reported once a year, and you'll find that lenders will want to see what it is right now, and they'll ask for it to be certified by an accountant or a lawyer or somebody like that. So having those registers around might be important as you grow, and for other reasons. Sometimes you just get randomly asked for them, so definitely worth having a look at those. I think we've done other podcasts before about talking about the registers, but they're not a complex thing, but you do need them, so check those out. And you generally do not get them at the time of recording the video. You don't get them when you form a Companies House. They're just something you've got to make up. So check those out. You can make them up. Absolutely, you can. You can Google it and try and find them out. But if you're unsure and you need some support, use a formation agent to avoid some of that hassle, or you can get made up later. So that's there. Now, some agents, third-party agents and formation companies might have like connections with the bank, or they might help you register for corporation tax or do some of these other things at the same time. So that's going to be useful as well. So check those out. And they're not very expensive, formation agents, in all honesty, for what you get from them. I'm going to say that obviously, but it's as somebody that does this and my team do this, but it's as an overall thing, I think it's a good service, with the registers and everything. So if you are using an agent, just check, do I get my registers? If you're thinking of doing, AB, funky share structures, do my articles work, those kind of things? How can you help me register for tax, or do you register me for any taxes, that kind of stuff? So whoever you choose, you would have formed your limited company, say 24 to 48 hours, depending on what's going on. There is like a same day formation fee you can pay to company's house, and they'll do that as well. You just pay more money. So that can be there. It can be live really, really well. The one thing that's interesting, I think, is trying to time is if you try and time it for I've seen it before where clients want to time it so it shows on their certificate was formed on their birthday or something. It can be quite hard to time, but in theory it's possible. So you can do it. It's relatively predictable. So there we go. You would have formed your company. Now, whilst you're forming your company, there's going to be one key question there, and that's going to be choosing your SIC code, your SIC code. Now, the reason I put this in this podcast is I just want to say to you, don't worry too much about it. You want to pick a rough sector that you're in. And it sounds really odd because you think of all the different sectors that are out there. Some really common sectors don't, when you go through the list. So a SIC code is just it tells the world publicly roughly what you do or what sector you're in. But there's loads of them that just don't exist. And you end up in codes like professional services not elsewhere classified. So it's really wide. You'd think there would be a really clear one for certain sectors, and there isn't. Yet there is one for something like an extraterrestrial organization, which I really want to work with, by the way. I think that would be cool. So there's different codes that you can have. So just pick something roughly close to what you do, but try and make it as close as possible, and don't be tempted to add 15 million of them. Just one's fine. If you really do completely different things in sectors, maybe it's worth adding a couple. But the reason I say be cautious is, again, when you're looking to form banks or do anything with anybody that needs to check your company out, too much confusion there will cause more questions and more due diligence and potentially more justification, or you having to change it because you realise, I don't really do that, I just did it in case. You can always add them later. It really doesn't matter. And from a tax perspective, they don't really look at those. They look at your corporation tax return and everything else. Yes, it's a publicly available thing, should be correct, but I wouldn't stress about it, basically. I would just make sure it's as close as you can and go from there. You can always change it later. So keep it simple. It's not an exact science, and there is not an exact category for everything that you might come across. Even, as we say, some of the most kind of generic things don't have their own category. So once you've done that and you form your company, you're starting, you're there. You formed it. It's exciting time. You're pumped. You can go and get your wholesaler's card because you're a director of a limited company or whatever else you want to do. I'm not a big fan of the CEO on LinkedIn, but you could in theory put your title on whatever you want to call yourself and go from there. So that's always an exciting time. I'm pumped for anybody that forms a limited company. And I know when I've done side businesses and different companies over the years, it's always an exciting day. So congrats if you're there. Now, practical next steps. You want to get a bank account. The reason I want to mention that one is because this is the most practically applicable thing, right? You've got this company, you want someone to pay you. The business is not going to work if someone can't pay you. And the bank is the most onerous step a lot of the time because they've got regulation and things you've got to prove, an ID you've got to supply. Now, in terms of what bank you choose, I don't really have a strong opinion on either way. We've got clients who've had great experiences with multiple different banks. I think what you've got to look at is, what do you want the bank to do for you? If you've never had a business bank account before, it may surprise you to know that often you have to pay for them, particularly if you want to pay cash in the bank. And that sounds weird because we're not used to that as sort of personal bankers. You just give your money in and they bank it and they're happy about it, right? But as a business, they charge you like handling fees effectively for doing this. Now, a lot of the online ones will advertise no fees, but they have got fees quite often for certain things like paying cash in, or you just can't pay a check in. So, or you can only do it, but it's at a post office or something like that. So have a look and we'll just work out, is this the right bank for you? And then go from there. And while you're doing all of this, you might be asked for something called a TIN or a tax reference or a UTR. Just know they're all the same thing. They're a tax reference, a 10-digit number. You get it, it's a corporation tax number, and it comes generally in the post or by, I can't remember if it's been emailed these days, but normally it comes by post and to wherever's registered, and you can give it to the bank. So sometimes you might not have it immediately, but a lot of them will allow you to supply it later. But over the last few years, they've been really, really hot at shutting your account if you do not provide this information. So do make sure. I've seen so many clients get in problems with their bank suddenly not working, and it's because they didn't supply this information. So make sure whatever information you're asked to prove who you are and what your tax references are there. But yeah, do know that TIN, TIN, UTR, they're all the same number really. The TIN's like an international version of the name for a tax reference. So that's that. And sometimes you might even get asked for like an accountant to confirm that you're trading and things like this. There's a weird one. I mean, Starlin, going back, I don't think we've done for a while as far as I recall. Maybe the team have, but me personally, I haven't seen one across the printer for a while. But they used to always do this thing where you needed to have an accountant or somebody to show that you were actually trading, and you're a real kind of legitimate person, I guess. And we had like a boilerplate letter that we used to do for people. So yeah, sometimes you get asked to do some more steps to prove who you are. I know even Barclays had it where I think I had a side business that I had to write a letter to myself proving that that I existed or something. It's really silly thing. So they've got these rules and regulations. You've just got to make sure that you can give them what they need. So practical next steps: get that bank, get all that information in, and then that's you at least out the way. The only final thoughts I would say on a bank is just be really happy about where you're sticking your money. If you've been following the news over years, you'll know banks do go down. There's also a lot of like online banks. It's like you've got to be confident that that's where you want to build your money, and just make a genuine decision like you would if you were going to invest money. Where do I want them? If I think I'm going to grow into something substantial, am I happy with who I'm banking with? Do I think they've got the services I'm going to need as I grow bigger? It's weird. I think a lot of people just go straight for the easiest thing, but I would absolutely urge you, because it is a lot of hassle, to just think about that initial bank account and go from there. Maybe ask a friend or somebody that's already in business or a business connection what they do and get some opinions and go from there. Now, once you've got that, you've got the company set up, so you have actually formed it now. You can trade. You've got your little certificate of incorporation, which the banks will also want to prove that you're around. Excellent. Well done. And then I just want to talk briefly about the future. And it would be remiss of me as a business accountant not to say to you, think about filing. So you'll have, there's other podcasts we've done on this about what you need to file, but in brief, you'll have a set of accounts that needs to go to Companies House. You'll have a set of accounts that need to go with your corporation tax return to the revenue. You'll also have with Companies House a confirmation statement once a year that you have to pay a fee to submit, and a persons of significant control register, so all that has to go in. And I'd urge you not to leave that to the last minute. The persons of significant control register and the confirmation statement are generally done on your anniversary, but your accounts, you normally get 9 months after the year end to submit, and you actually get a year for the tax return, the corporation tax return. But sometimes in the first year, you'll actually get 2 corporation tax returns. As I say, this is a subject for another podcast, but don't leave it all to the last minute, because all these things got to be sorted out. And if you're thinking it's like it is with a sole trader and there's some free tool you can log on to, you will be sadly disappointed to find out that there is a free tool, but it's highly complex to use. You need accounting knowledge, and it only fits a very specific filing type. And in June 26-ish, current prediction is disappearing. So, if you're depending on when you're listening to this, either way, you're going to need to think about these steps. So, and generally you're going to find yourself in the world of needing an accountant. So, and I would always, as an accountant, I would always say, make an approach as early as you can, because you also, you're probably going to want some advice and make sure you're, paying yourself the most tax efficient way, or, some knowledge about, can you deduct X or Y? And many accountants, it's best to engage with them as early as you can, really. So, think about that and go do your research about who you want to work with. So there we go. That is the main steps on how you would form a limited company, and the main description, sort of decisions, I guess, that you need to go through during that process. Hope you've enjoyed the show. If you have, please do subscribe via your favourite app so you don't miss an episode. If you get 5 minutes, I'd love it if you can just go online and drop us a review. If you're watching this on the HeelanHub YouTube channel, drop in your comments and let us know any of your thoughts on the show. It's one of the cool things about being able to interact both online, is just hear how people are getting on. And if you've done your own limited company, stick it in. You don't have to put the name or anything. I think it's just cool to celebrate with people about when they've started up a new business, because it's one of the most exciting times. Obviously, if you listen to this in your earpieces and you do get 5 and you want to share that, you can get in contact with anything that you want to around the show, and you can do that at info@heelanassociates.co.uk via email. For more business insight and tax tips, be sure to connect with me and my great team on all the social media channels, including, of course, YouTube, our main channel at Heelan Associates. There's the HeelanHub channel if you want to watch this live, or if you're watching this live, you already know about this. You can also connect with us via Instagram, TikTok, LinkedIn, pretty much anything, Facebook. We're on them all. So please do check us out on there. You can also sign up to our 2 weekly HeelanHub Herald, which is a newsletter directly your inbox. Contains even more business insight and tax tips. You can do that on our website, heelanassociates.co.uk. Scroll up and down and you'll be prompted with a box eventually that you can put an email address in, and that's there. We don't move your data on, it stays with us. That's it. The only other thing to bear in mind is we often talk about the best way to save tax being that you need to keep good records. And if you do want to do that, we'd always suggest a cloud accounting platform. And for me, the best one out there currently is Xero. And I think that's would get the vote from most of our internal team if you did it. I mean, there's some great products. You can see QuickBooks is often something we talk about as well. But if you currently, there is a great discount with Xero. If you go to heelanassociates.co.uk/Xero, you'll be able to find there's an amazingly discounted license there you can buy. So go and check that out as well. That's it. Have a profitable and tax efficient week, and I'll see you in the next one.